Hello, very good morning to all and happy Friday. I'm Kelvin here. Welcome to today's Daily Dose of Market Insights. Very good morning and happy Friday. Today will be the 13th of December 2024. So before we jump straight into our Daily Dose of Market Insights for today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's kickstart with what has taken shape yesterday in terms of the relevant key important news flow, economic data releases, and as well as the cross-asset class intraday performance. So let's start with the economic data release. I would say it's more of a events-driven affair yesterday because of ECB meeting. So what we could see over here is in ECB, they do not kind of surprise market expectation. So what they did over here, let me share my screen. They cut interest rate as expected. All right, over here. So if you look at the ECB depot rate, they actually cut the third time this depot facility within market expectation of 3%, all right, from 3.25%. So it's the third cut. But during the press conference of President Lagarde, ECB President Lagarde, they actually kind of signal that they are actually prepared to turn much more dovish next year. So that actually also kind of came in within our expectation, which I explained to you guys yesterday, that ECB right now is no longer in a kind of a rather cautious stance, but instead they flip to a kind of a recession fighting stance to prevent Eurozone from slipping into a deflationary spiral. So what based on the press conference that they conveyed yesterday, market now is actually potentially looking at quarter point rate cuts in the next two meeting. So potentially there will be 25 basis point, another 25 basis point cut in January and as well as in March over here. And this particular we call it dovish, much more dovish expectation as market is expecting from ECB right now also can be further supported by the latest economic forecast projection that was also released yesterday as well. All right, ECB upon the release of the monetary policy statement. So what they did over here is that the one, okay, if you look at the screen over here, the one in bright pink is the December forecast, means yes, based on the latest forecast, and the black one is September forecast. So what I could see over here is over the short, medium term to long term, 2025, 2026, 2027, all the inflation trend forecast has been reduced in 2025, right? 2025. And what's important over here is that the growth forecast has been reduced as well. All right. So for 2025, they actually downgrade to 1.1% from 1.3%. And for 2026, they reduced by one basis point from 1.4% to 1.5%. So net overall, right, the impact of this is a weaker euro dollar. So the euro dollar continues to inch lower, fail to break above the 1.054 resistance level, which is the 20-day moving average as well. And net overall, based on this rather dovish stance that's being portrayed by ECB, the dollar actually strengthened across the board yesterday. Right, so this is the 5-day rolling performance of the dollar against other major currency. So the dollar right now is strengthening the most against the dollar yen and the dollar Swiss franc. So the dollar Swiss franc as well. Yesterday we do have SMB meeting, which is the Swiss central bank. They also cut their interest rate by 50 basis point. All right, so net overall impact, dollar strength has flowed into the market. So that shouldn't be a big surprise for those who follow our daily dose on a frequent basis. So we do highlight dollar strength elements, positive elements in my series of daily dose on Tuesday and Wednesday based on the intermarket dynamics that is playing out on the dollar index with the bounce as well as the parallel support on the 10-year and the 2-year treasury yield. All right, so I don't want to touch on that again. All right, so on the FX, on the stock indices market over here, after a fresh all-time high on the Nasdaq 100 hit on Wednesday, yesterday, across the board, we see profit taking on the 4 major US stock indices, dragged down by the mega cap technology stocks, which actually almost all of them ended in the red yesterday. Okay, let me highlight for you guys to take a better look at it. Okay, give me a couple of seconds. I know why it's hang. Yeah, good. Finally, it shows up. Okay, so what I could see is that the mega cap technology stocks, most of them are in the red yesterday with Nvidia down negative 1.41%, Amazon down negative 0.56%, Google down 7.6%, Tesla, not really a technology component, but it's part of the mega cap technology cohort as well. Part of the mega cap cohort as well, pardon me, down negative 1.57%. All right, so actually causes the major stock US stock indices to shade that pullback yesterday. But nevertheless, later I'll share with you on the Nasdaq 100 that pullback, yes, we expected, and the pullback managed to stage a rebound right slightly above the short-term pivotal support that we highlighted as well in our short-term intraday technical outlook yesterday. So I'll touch more about the technical configuration on the Nasdaq 100 thereafter. And another news flow I share with you is more pertaining to China. So we know that China yesterday ended this closed door Central Economic Work Conference over here. So actually nothing much. It's just kind of a rhetoric stating that because usually at the end of this kind of a significant closed door meeting, the local press will tend to issue a very kind of vague policy guidance that has came out from this type of significant meeting attended by top tier policymakers in China. So what they did over here is that the state-run Xinhua news agency stating that they made a statement called lifting consumption vigorously and stimulating overall domestic demand as their top priority. So it's just a very granular, grandstanding kind of statement, indicating that in 2025 there will be potentially more stimulus measure to negate the deflationary risk spiral in China. But market participants, patient is time. All right, because in the last few months there have been this issuing of this kind of very grandstanding, broad based statement, but what market participants want is how are they going to implement this fiscal stimulus measure, what's the amount, and where do they want to target, all right, consumption or targeting on the export, the external economy. So without any clear signs of details, we potentially could start to see the kind of very vicious whipsaw-like sideways movement on the Hang Seng stock indices as well as the China benchmark stock indices. All right, so this is the news flow that take shape yesterday, and as well as the impact on the broad-based cross asset classes that I share with you, the intraday performance. So now let us now jump straight into the short-term intraday technical outlook, starting with the FX market first. All right, so without further ado, let me expand my screen so that you guys could have a better view of the charts. All right, so let us start with the FX market. Over here, euro dollar. Okay, so for the euro dollar continues to decline within our expectation. So tested one time, two time, three time, come break above the 20-day moving average, which is the 1.0540 short-term pivotal resistance that we highlighted yesterday. So still using this 1.054 pivotal resistance very clearly, it got rejected three times and almost retest it on the onset of ECB announcement. Then thereafter it plunges lower and hit our first support at 1.0460. So below 1.0460 exposes 1.0410 next. And if this level doesn't hold today, potentially it could revisit the critical pinpoint low of 22nd of November at 1.0330. All right, only an hourly close above 1.0540 will invalidate today's intraday bearish bias to see a kind of whipsaw, we call it choppy corrective movement to revisit the minor swing high area of 6th of December and 9th of December at 1.06. Only a breakout above 1.06 potentially validate a mean reversion rebound scenario, exposing the next near-term resistance zone at 1.0660 / 1.0680. So given the fact that yesterday this kind of much more dovish stance that is being portrayed by ECB, and that also causes a feedback loop into the sterling dollar as well, and the sterling dollar broke below the lower limit of the neutrality range at 1.27 of 20 level. This is the neutrality range that we have yesterday. It broke down very clearly. Now it's also breaking below the 20-day moving average, and as well as the former minor ascending trend line that was previously supported since the low of 22nd of November. So given the breakdown of that lower neutrality range that we highlighted yesterday, we will now flip to a intraday bearish bias, given that it's a bearish breakdown from that minor range configuration that has been in place since the entire week on that took shape since last Friday, 6th of December. All right, it broke down this close to about 1 week range. So with this breakdown of this 1 week range formation, we will flip to an intraday bearish bias, given that technicals are weak right now, encouraging potential further downside on the sterling dollar. So using this particular breakdown zone here, which is also the pullback of that former minor ascending trend line support, now turns into a pullback resistance level, 1.2720 / 1.2745. So this will be my short-term pivotal resistance zone for today to flip to an intraday bearish bias. First near-term support level to watch on the intraday basis, 1.2610. A breakdown below it exposes 1.2510 next, which is the minor swing low area of 22nd of November and 26th of November. Only an hourly close and a breakout above 1.2745 will invalidate today's intraday bearish bias to see a choppy movement push up to retest the 200-day moving average, I think as a resistance at 1.2810. Only a breakout above 1.2810 potentially validate a extension of another round of mean reversion rebound scenario to expose the next near-term resistance in first step at 1.29 figure level. All right, which is the congestion area of 7th of November and 8th of November. So that's for the sterling dollar, flipping to a intraday bearish bias given the bearish breakdown of the lower limit of that 1 week plus of neutrality range. Now, turning our attention now will be the Asia Pacific currency against the dollar, starting with the dollar yen. So the dollar yen continues to trade higher, given the fact that the rest of the dollar major pair is also showing signs of dollar firmness as well. So given that it's now trading above the 200-day, the 50-day and the 20-day moving average, we got to respect this current bullish momentum that is being played out on the dollar yen. So using a Titan key short-term pivotal support level for today at 15210, which is the 200-day moving average, yesterday minor swing low area, and as well as the pullback support of that former minor descending trend line, a minor descending channel resistance now turned into a pullback support level. All right, so as long as this one Titan key short-term pivotal support level holds 15210, any potential pullback, we will still maintain that intraday bullish bias on the dollar yen. First resistance level to watch remains unchanged on the intraday basis, which is 15330, 15370. Only a breakout above 15370 potentially expose the next intermediate resistance level to see a further extension towards 15470 next. Right, so that's for the dollar yen. However, if price action starts to break down with hourly close below 15210, so this particular movement here yesterday is deemed as a failure bullish breakout above the former minor descending channel range, descending channel resistance, to see another choppy downward movement to expose in first step the next near-term support level to watch will be at 15095/60 next. Right, so that's for the dollar yen. Now, turning our attention will be the Aussie dollar. So the Aussie dollar yesterday shaped that bounce, hit the first resistance level at 64.35 before trading downwards, right, lower. So it seems to us that price action right now has starts to be bearish again after the failure to actually break above the 64.35 level, which we highlighted yesterday. So with this failure to break above the 64.35 level, which is so right below the 20-day moving average, we will actually now flip to a bearish bias on an intraday basis. So any bounce, as long as it didn't surpass 64.35, there'll be a risk of further downside. So a breakdown below 63.40 level over here, which was the minor swing low of 11th of December, potentially exposes the next support area in the first step at 63 figure slash 6285 next. All right, so this 63 figure slash 6285 is in fact the minor swing low area of 13 of this level of 4th of October, 13th of October and 26th of October last year. All right, so only a price action push up and a 1 hour close above 64.35 will revive that mean reversion rebound scenario on the Aussie dollar to expose the next near term resistance at 64.70 followed by 65.10 next. All right, so that sum up the intraday technical outlook on the major FX dollar pair. So now turning our attention now will be the major stock indices, starting with the Hong Kong 33. So like I say, I mentioned market participants is getting, we call it losing their patience in terms of this grandstanding bullish expansionary fiscal and monetary policy, vague, not say vague, kind of a very broad-based statement, but market participants want to hear the exact implementation and the exact stimulus amount that target which sector of the Chinese economy. So unless we start to hear this kind of much more detailed physical and stimulus plan, we will witness this kind of visual, we call it a wild swing on the Hang Seng Index or the Hong Kong 33. So yesterday, ahead of the release of the, we got the statement of this central work committee meeting, market bounce up, hit our first resistance level, come breakthrough, then thereafter it starts to tumble down upon the release of that statement and just stuck over here right now. So right now what you could see is that it's still being supported by the 20-day moving average and as well as this minor ascending trend line that is supporting the previous series of higher low since the low of 26th of November. So with this 20-day moving average and this ascending trend line that's being still being on support on the current price action, I can't turn outright bearish on the Hang Seng Index or the Hong Kong 33. So with that, I'd rather turn into a neutrality stance for today, neutral between the 50-day moving average, that price action reintegrate back below it right now at 20,300, which is so very close to today's Asia session current intraday high, and the lower limit will be the 19,770. Unless price action now can stage a breakout above 20,300 level, then we could see some signs of intraday bullishness coming back into the Hong Kong 33. In first step, the first resistance you got to surpass for after 20,300 will be 20,520. Above it potentially exposes 20,820 next. So that's for the Hong Kong 33, i.e. the Hang Seng Index. Now, turning our attention now will be the Japan 225. So for the Japan 225, right now is trying to play around with our short-term pivotal support that we highlighted yesterday at 39,450. So I give a bit of access right now at 39,230. So still maintaining that intraday bullish bias, but I will have a kind of a upside trigger level for the first resistance that will surpass will be at 39,830. Above it, potentially revisit 40,155 / 40,280. So this level is very important. Why? Because this 40,155 / 40,280 is in fact the upper limit of that sideways range configuration of the Nikkei 225 or the Japan 225 that has been in place since the low of 27th of September. So it's close to September, October, November. It's about coming close to a 3 months range configuration. All right, and the 40,155 / 41,155 / 40,280 is the upper limit of this 3 months sideways range configuration in the Japan 225. But however, if price action starts to break down below 39,230, the excess short-term pivotal support level, then potentially price action may start to reintegrate back into the bottom of the sideways range again. So in first step, the next two support level to look out for on the intraday basis will be 38,990, followed by 38,670, which correspond to the 50-day, the 200-day, and the 20-day moving average, acting as the similar support level with these two support level as well. So that's for the Japan 225. Now, turning our attention will be the German 30 or the German DAX. So the German 30 and German DAX managed to stage a bounce right above our short-term pivotal support that we highlighted yesterday, 20,260. So still no change, still using 20,260 as my short-term pivotal support for today, maintaining that intraday bullish bias. Only we got to now see a very fast breakout above 20,470 because this has been tested almost 2 times yesterday. So a breakout above 20,470 will increase the odds to kickstart a impulsive up move sequence on the German 30, exposing the next intermediate resistance level, which has been defined by a Fibo extension cluster level at 20,650 next, after a breakout of 20,470. Only a push down with an hourly close below 20,260 will invalidate today's intraday bullish bias to kickstart a much more pronounced minor corrective pullback scenario, exposing 20,155 next, and below 20,155 potentially sees 19,960 next over here on the German 30. Okay, now with that, let us now take a look at the US Wall Street 30, which is the Dow Jones Industrial Average. So the Dow Jones Industrial Average now is actually right inside the short-term pivotal support level that we highlighted. So still no change because it's still holding at this support level right now over here. RSI now has dipped down to the oversold region. So still using the 43,980 / 43,807, which is still our short-term pivotal support level. Still maintain that intraday bullish bias, looking for a potential we call it at least a short-term intraday bullish reversal, as long as this key short-term pivotal support zone holds. First resistance that it got to surpass will be at 44,350, which is the minor swing high area of 11th of December. That also confronts with the 20-day moving average, acting as a resistance level as well. Only a price push down below 43,807 with an hourly close below it will see the further extension of this corrective pullback sequence to expose the next support level at 43,325, which confluence quite closely with the rising 50-day moving average as well. Now, next up will be the Nasdaq 100. So the Nasdaq 100, yes, they shaped the intended pullback as expected, but the pullback managed to hold at the 21,530 short-term pivotal support level that we highlight as well, very close to it before shaping that bounce up during right now at the Asia session. So no change, still using that 21,530 as my short-term pivotal support level, still maintaining that intraday bullish bias on the Nasdaq 100. So the first resistance level to watch, I will actually use yesterday's Asia session swing high at the start of Asia session swing high, which is 21,800. Above 21,800 exposes the next intermediate resistance level at 21,950 / 22,036, which is the 0.618 Fibo extension, and as well as the 2 times Fibo extension over here. from the low of 19th of November. Okay, so two different degree of Fibo extension, forming a Fibo extension cluster level at 21,950 / 22,036, also confluencing with the upper limit of this ongoing minor ascending channel that is in place since the low of 19th of November. Only a price breakdown with hourly close below 21,530 will negate this bullish tone to kickstart a much kind of a minor corrective pullback sequence, exposing 21,400 next. Only a breakdown below 21,400 will see a much more deeper pullback in the first step, exposing the next near-term support level at 21,220, followed by 21,100, which is correspond to the rising 20-day moving average as well. All right, so that's for the Nasdaq 100. Now, turning our attention now will be the commodities market. So on the commodities market, let us kickstart first with Gold XAU / USD. So still recall Gold XAU / USD. Yesterday we do have a bearish bias to look out for that mean reversion decline or that potential retracement after that 1 2 3 4 1 2 3 4 5 wave up sequence. So price action indeed hit our support level at 2,674. We also correspond to the 50-day moving average, and if you do the Fibo retracement of the 5 wave up previously from the low of this 6th of December all the way up to the wave 5 high, which is 12th of December, this also correspond very closely to the 50% Fibo retracement level as well. So using 2,674 as my short-term pivotal support level for today, I will flip to a intraday bullish bias on Gold XAU / USD. First resistance level to watch for on the intraday basis will be at 2,705. Above 2,705, potentially revisit 2,728 next. Only an hourly push down and the close below 2,674 will see the extension of this mean reversion decline to expose the next support level, which is 2,653, that correspond to the rising 20-day moving average, and as well as the 61.8 Fibo retracement as well of that 5 wave up. All right, over here. So net, given that it has really come close to the support level, 50% Fibo retracement, 50-day moving average, and as well as the hourly RSI has started to shape a series of higher low after hitting the oversold region, we will flip to a intraday bullish bias on gold again, using 2,674 as my short-term pivotal support level for today. All right, now turning our attention lastly will be the West Texas crude oil. So the West Texas crude oil continues to trade within our range, our neutrality stance range as expected. So 70.80 come break, came down, revisit the lower limit at 69.30 before staging a bounce up during the start of the second part of the US session. So still no change, still keeping that neutrality stance on West Texas oil since already Friday. So neutral between 70.80 and 69.30. So only hourly close above 70.80 potentially sees the extension of this mean reversion rebound within this major descending triangle range configuration, exposing the next resistance at 71.70 next, all right, after 70.80. So after 70s, if 71.70 can't hold for today, but potentially it should, because it's really Friday, if we start to see a very weird, we call it a geopolitical risk premium uptick again, a breakout above 71.70 potentially sees 73.15 next. So 73.15 is quite key on a short-term basis. Why? Because this has been acting as a resistance for WTI crude oil boost that can't break above it since 24th of October. So tested one time, tested two times on early part of November, and also tested tested 3 times in the early part of November, 5th, 7th, and as well as 8th of November. All right, so there's a 4 tests of it at 73.15. All right, so this is a rather critical short-term resistance to look out for if price action were to float back to this level over here for West Texas crude oil. So net still maintaining that neutrality stance on the intraday basis for today, 70.80 and 69.30 on West Texas oil. So that also sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today is Friday, a rather quiet day in terms of data. So some data I want to highlight over here is more pertaining to a second tier data in UK, which is the monthly GDP, because UK now is kind of a bit I'm not sure whether it's advanced or not, or because they release monthly GDP figure right now. So this monthly GDP figure is not is for the month of October, so it's still quite delayed, October. So that is at 3 p.m. Singapore time. So market is actually expecting a recovery to 0.1% month on month from the previous month of September, that is negative 0.1%. Then thereafter, during the European session, later part of European session, we have Eurozone industrial production that's up at 6 p.m. Singapore time. All right, and thereafter there will be a rather quiet US session. So on top of China data, there's this money supply second tier economic data pertaining to China, M2 money supply. So that's more like we call it liquidity in the Chinese economy. So we know that the China government has been giving very generous monetary policy stimulus by cutting the various key benchmark interest rate and the reserve requirement. So we got to see whether does this outstanding money supply starts to increase as well, or they become a liquidity trap in the Chinese economy. So if you look at the outstanding loan growth on China on a year-on-year basis, it's still rather lackluster at 7.8%. So you look at the trend. Okay. Okay, it's still inching downwards, despite the fact that since the start of this year, the China Central Bank, under the guidance of the top policy maker, continues to engineer loose monetary policy. But however, the amount of yen loan growth failed to actually pick up, right? So if it continues to fail to pick up over here, there's a big risk that whatever cheap money that is being supplied in the Chinese economy is not being picked up by the end user. It continues to be stuck in the financial system or in the banks, where they are kind of either reluctant to lend out these excess funds, or borrowers or businesses from the retail perspective and the corporate perspective have no confidence in taking out bank loans to invest in capital investment, or let's say for education purpose as well. So that is something to take note of. So if this loan growth continues to plummet over here, there's still a big risk that the deflationary risk spiral continues to be entrenched in the Chinese economy. Okay, something to take note of for today. But unfortunately, based on trading economics, we do not have the timing of this money supply and outstanding loan growth data. All right, so over here, that's pretty much sum up today's daily dose of market insights. So with that, I wish you all a great weekend and restful weekend. Kelvin here, signing off, and we shall speak again on next Monday. Thank you.